He's often called the last voice as far as global oil and commodity prices are concerned. And who better than Dr. Fatih Birol of the IEA joining us right here on ET Now. Thank you very, very much for being with us. 2016 has been a tumultuous year for oil. The year started with oil levels at 25, have gone up to about 50. What does 2017 hold for us? Many people believe more volatility perhaps.
We have now almost prices doubled compared to last Davos when we talked.
That's right.
It was about $28. Now we are about $56, $57 today. This is mainly driven by the agreement made by OPEC and some non-OPEC countries.
Right.
And if this agreement is implemented, we think the prices will be around these levels for some time to come. Having said that, this price increase brings some surprises with itself. A few of them being U.S. shale oil, which was declining last year because of the low oil prices. Now we think this year it is going to start to increase again and pour a lot of oil in the markets.
That's right.
Which means that perhaps in a few months of time we may well see U.S. shale oil putting downward pressure on the prices. And once again, this means, as we have been saying for some time, greater price volatility in the international oil markets.
So greater price volatility as far as 2017 is concerned, but how real are the concerns that U.S. shale can actually put a cap on oil prices that were beginning to rise?
No, this is not anymore a theory. This is what is happening. So last year, because the prices were low, many U.S. oil companies were in a difficult situation and the U.S. shale oil production did decline. But when the prices went up in the last couple of months, we have seen the activity, the rig activity has been increasing in the United States. And as a result of that, we expect 2017, they are increasing again, showing that there is a type of cap or whatever you call it when the prices go up. So prices cannot go forever higher, unlike what we have seen before.
So there are two sides of pressure on oil prices. One, of course, is the OPEC and the non-OPEC, and of course the other one is the shale. But how serious and how real is the optimism that came in from the OPEC and the non-OPEC deciding to cut production? Are you seeing effective implementation by countries, or is this a promise well made but perhaps may not be well kept?
I think the promise or the plan was made, and when you look at the prices, the price increases, it means that the market believes the agreement, and if the agreement is implemented as it is designed, we will see that the markets will rebalance sometime first half of this year.
But do you expect members, both OPEC and non-OPEC, to go back on this promise simply because if shale does add that pressure, there will be very little for these people to do?
I think it's up to them what they are going to do, but my job is to remind them that the oil markets have changed. Now you have a very flexible, price-sensitive major oil production coming from United States, and not only that, we will, if the prices remain at this level, we will see increases coming from Brazil, from Mexico, from China, and elsewhere.
Indeed. While at the U.S., President-elect Donald Trump has also appointed Rex Tillerson, the ex-ExxonMobil CEO, as a part of his cabinet. What does this mean for the U.S. energy policy? Do you see a big rush for shale and a big push for that, further push than was perhaps being anticipated, that appointment perhaps?
Rex Tillerson is a colleague of mine, and he is a very pragmatic man. Of course, as a Secretary of State, what he is going to do is something we all will see. What I expect is that U.S. oil and gas production continue to increase in the next years to come, and both commodities, U.S. will be one of the key players, both at home and globally.
Dr. Birol, what is the equilibrium prices that you see for oil, which is going to be a win-win for both the producers of oil and also the big consumers, countries like India that export a lot of their oil?
Countries like India will have to shape its economic policies by considering that there will be a significant amount of volatility. And because India imports a lot of oil, a lot of gas, and this will increase. Why? Because Indian economy is growing and energy has to fuel this economic growth. So therefore, my advice would be Indian economic policies need to take into consideration rather volatile price context in the next years to come. And as much as possible, India also has to make the most out of its domestic resources. This can be renewable energies, this can be nuclear or clean coal, so that the imports are reduced to a minimum as much as possible.
As somebody who keeps a tab on what countries across the world are doing, do you think India is doing enough with renewable energy per se?
Oh, very much so. In fact, I am just coming here from Abu Dhabi. I had an excellent meeting with Minister Goyal.
That's right.
The India's ambitions for solar are excellent, and if those ambitions are followed, if they are realized, I think India will be one of the solar powers of the world. And as International Energy Agency, we are supporting India strongly to reach that very important target.
Indeed, the world oil demand is expected to grow by about 1 million barrel per day in 2017. Do you believe that's a fair assessment?
I think so. Our expectations are a bit higher than 1 million barrels per day, 1.3, 1.4, depending on the economic growth. And this may well be coming from the China. India is one of the drivers of oil demand growth, and this may also play a role, the growth of oil demand in the earlier rebalancing of the markets.
Talking about rebalancing of the markets, do you expect President-elect Donald Trump and Vladimir Putin to bond over oil? One is a big producer and the another is going to and wants to flood the market with shale gas, because many people believe this could be leading to competition as well as cooperation.
Of course, it is impossible to forecast what President Putin and President-elect Donald Trump will do in terms of oil, but as an energy person, I prefer oil remains as a business, not an extension of politics.
On that note, Dr. Birol, thanks very much for speaking to us right here at TT Now. In conversation with us right here at TT Now from Davos is Dr. Fatih Birol of the IEA.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.